Intel reported quarterly financial results that sent the stock price lower. Of course, I'm disappointed about that because I had Intel stock rated as a buy. In fact, I've had Intel stock rated as a buy all year long in 2025. Zooming out, Intel stock is still up over 3.24% year to date, but now those returns trail the returns of the S&P 500 index, and with Intel stock, you are taking more risk than investing in the S&P 500 index. So this pick hasn't been one of the best so far. Still, it's not a disaster, and the company is making progress forward. In this video, I'm going to review Intel's latest quarterly earnings results, what it could mean for Intel stock investors. I'll also share with you my updated proprietary discounted cash flow valuation model following the company's earnings results. I'll share with you my intrinsic value per share calculation, and I'll reveal my updated recommendation for Intel stock and let you know if I think the stock is a buy, hold, or a sell following its earnings release.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Intel management team telling investors that their operating performance demonstrates the initial progress we are making to improve our execution and drive greater efficiency. And I would say the operating performance is not yet reflecting the progress they're making. They are initiating new decisions and continuing some previous decisions that were started under the previous management team. And we're still in the very early stages of those decisions coming back to show up in the company's financial statements. The CFO saying that the changes we are making to reduce our operating costs, improve our capital efficiency, and monetize non-core assets are having positive impact as we work to strengthen our balance sheet and position the business for the future. And if you haven't been following Intel stock longer term, let me give you a brief history on how Intel got to this point. A few years ago, Intel found itself in a position where it was trailing in the technology, in the market, in the technologies it was serving. Years of underinvestment in research and development had put Intel at a disadvantage to competition. So they hired Pat Gelsinger, and when Pat Gelsinger met with the board of directors, he outlined his plan for how he wanted the company to get back to a leadership position. And those plans included a very ambitious, and I'll repeat, very ambitious, very aggressive capital investment plan to get the company back into a leadership position. And those investments included tens of billions of dollars in investment in research and development, in manufacturing expansion, and in manufacturing enhancement. It also included adding a foundry segment to Intel's business, whereby it would create manufacturing sales where other companies would hire Intel to manufacture their designs. So Intel would be offering manufacturing services to outside companies. And so that was the plan. A few years into that plan, the board of directors started losing confidence in that plan. So before that investment in all of those categories I highlighted started to bear fruit, Pat Gelsinger was forced out. And this happened, I want to say a little less than a year ago. The new CEO is now in his second quarter, and the new CEO is changing those plans to some degree, shrinking them, making them less ambitious, and right-sizing them, because the initial response that Intel has been getting from those investments has been less than stellar. And so the new CEO is now shrinking those plans, and we're going to see some of that here. So Intel said that they completed the majority of the planned headcount actions it announced last quarter to reduce its core workforce by approximately 15%. And this is part of the plan to reduce operating expenses down to $17 billion for 2025, and they have further cuts planned for 2026, again, shrinking the business. Intel plans to end the year with the core workforce of about 75,000 employees as a result of workforce reductions and attrition. Right now, they have about 100,000 employees, so they plan a further reduction of about 25,000 in a combination of reductions and attrition. So, speaking about those manufacturing investments, Intel saying it will no longer move forward with planned projects in Germany and Poland. It will also consolidate its assembly and test operations in Costa Rica into its larger sites in Vietnam and Malaysia. Intel will further slow down the pace of construction in Ohio to ensure spending is aligned with market demand. So that's a big reduction in the planned manufacturing footprint for the company. Germany and Poland canceled, no longer moving forward with those investments in those facilities. The facility in Costa Rica looks like it will be closed, and those operations moved into larger sites in Vietnam and Malaysia. And then the construction in Ohio will be slowed down to let market demand catch up to what its existing manufacturing capabilities are as of this moment. So, this is a story of Intel having too much capacity and not enough demand, which is surprising considering the semiconductor industry overall, at least in the segment serving the artificial intelligence industry, is booming. Taiwan Semiconductor Manufacturing Company has all the business it can handle, and it's increasing significantly. Intel, meanwhile, is struggling to generate any revenue growth. So, this is a story of misplaced supply, supply that the market doesn't want right now, and investments that are turning out not to be effective. So, in the second quarter, Intel generated revenue of 12.9 billion, which is essentially equal to what they reported in the same quarter last year. However, they generated a larger operating margin loss of negative 25% compared to negative 15% in the same quarter last year. Some of the highlights include Intel launching 3 new additions to its Xeon X series of central processing units. I was looking forward to information about this launch. One of these, the Xeon 6776P, currently serves as the host CPU for NVIDIA's DGX B300, which is NVIDIA's latest generation of AI accelerated systems. And remember, demand for NVIDIA's AI accelerated systems are absolutely soaring. The company has a hard time keeping up with demand, and demand keeps increasing, supply keeps increasing, but demand continues to exceed supply. So this is a partner Intel desperately would need to work with and serve and be a good complement to the NVIDIA system and thereby ride the tailwind that NVIDIA is experiencing. The first Panther Lake processor SKU remains on track to begin shipping later this year, with additional SKUs coming in the first half of 2026. So we're starting to see the outcome of all of those investments over the previous years, the tens of billions of dollars in both manufacturing enhancement and manufacturing expansion, as well as investments in research and development. We're starting to see the products coming out, right? The first few products have not been exciting. The Intel Gaudi GPU came out to very poor results. And so hopefully these new products come out to positive results and better than expected results to make up for the failures of recent quarters and recent years. Management expects an improvement in revenue in the next quarter. At a midpoint of 13.1 billion, it would be a couple hundred million above the 12.9 billion it reported in Q2, with the gross profit margin also increasing sequentially to 34.1%. Thankfully, the company's cash flow from operations in the 6 months ended June 28th improved from the same 6 months last year, improved significantly, up to 2.9 billion in cash flow from operations, up from 1.1 billion in the same 6-month period last year. Still, free cash flow was significantly negative because they invested $8.7 billion in property, plant, and equipment, and these are for the manufacturing enhancements and the manufacturing expansions. But it's down $3 billion from the same period last year, where it was 11.6 billion. These investments have been shrinking, and the current CEO is making further decisions to shrink these investments even more. Remember, Intel is not putting up all of the money that's going to these property plants. Some of it is coming from the US government, which incentivized Intel to build these new facilities, and some of it is coming from financing partners that are helping Intel finance these expansions. Still, the cash flow is under pressure as the company has burned through tens of billions of dollars in making these investments that are not turning out as successful as investors would hope. All right, so now let's talk about valuation. And I updated my proprietary discounted cash flow valuation for Intel, and my new intrinsic value per share calculation has this stock worth $31 a share. The current market price is $20.70. So even though the company faces a difficult challenge ahead, the stock price has fallen so much that the valuation is still attractive for long-term investors. So to answer the question, do I think Intel stock is a buy, hold, or a sell after earnings? I think it's a buy, but I will caution investors that this is an above average risk situation. When a company has to turn things around, it's very risky. Many times these are not successful. These turnaround efforts are not successful. And so this isn't a situation for a low risk tolerance investor. This should only be for investors that have a high risk tolerance and a longer time horizon, because this isn't something that's going to get turned around in 2 weeks or 2 months. It might take 2 years for Intel to turn things around. So as an investor, you have to have that patience for this company specifically and the endurance to wait this out and see if the CEO and the leadership team can get the company back on the right track. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.